Welcome to Britain, a developing country. A series where we visit the movers and shakers in the property development industry to find out what's happening across the UK and examine what can and is being done to help solve the nation's housing shortage. Stephen Galpin, one of our resident property experts, is one of the UK's leading property consultants. He's a freeman of the City of London and has over 3 decades of experience in the property industry. In this programme, Stephen travels across London to meet some of the most knowledgeable people in property, to talk to them about the current state of the UK property market, what the Bank of England is doing in relation to this, and importantly, the major effect that stamp duty changes could have on the affordability of homes. He also probes into what we might be able to expect as we go into the future in somewhat uncertain times. In this programme, we will be speaking to John Stevenson MP, Stephen Jennings, a senior partner at the Simmons Gainsford Group, and Dominic Grace, the head of London Residential Development at Savills. Historically, the economic climate of the UK has heavily depended on the housing market. We are a nation of homeowners, and for that to succeed we need confidence, both in the supply into the market and for people when owning their own homes. But the fact is that whether it's directly related or not, the housing market has slowed in the 2 years since the vote to leave the EU. In fact, according to the Office for National Statistics, house prices grew at the slowest rate in 5 years in the year to August 2018. For many now, the question isn't what is the state of play, but is what can be done about it.
The market for the last couple of years has been somewhat flat. Government receipts from stamp duty, registered sales, people complaining about affordability, all seem to be stacking up. And what I'm interested to find out is, what do you think, as one of London's top agents, can be done to just stimulate this market?
Right, well, there's only, first of all, only so much that can be done, because of course it's important to have a sort of more macro look beyond just the pure property market. The economy, obviously big question marks, we're right in the heart of this wretched Brexit storm and all the uncertainty around that. And one of the telling things is, and perhaps we need to get used to this, is that projecting forward for a good few years and way beyond Brexit, in a market where actually both values and turnover, volumes of transactions in the market, will be lower than they would have been in previous decades.
Okay, well, looking at the market, we've obviously got 2 different ends. We've got the day-to-day, what shall I say, normal household purchases. We're talking about the lower end of the market, and at the other end of the spectrum, we're talking about the super rich buying very, very expensive houses, sometimes for the purposes of achieving a visa or other status within this country. What are the differences between, what are the 2 sensitivities between the 2 different markets? At the bottom end, is it pure affordability or ability to finance those purchases? Because obviously that's not the problem at the top end of the scale.
No, you're quite right to flag it, and it's very difficult to generalise about the market, and never mind, if you like, the ultra-prime versus more mainstream. Of course, you then need to look at it at a very granular level, and if we take London, which is my market, within London, one's seen extraordinary differences. In fact, our research department have an interesting slide that they often put up showing the performance of different boroughs over sort of previous 10 years and then more recently, and it's very stark. Obviously, the likes of Westminster and Royal Borough of Kensington and Chelsea over a 10-year period have shown some extraordinarily good growth, less so over the last 3 or 4, and then the other boroughs played a great game of catch-up over the last particularly sort of 5 years or so. Everywhere is slower now, make no mistake.
Just going back in time, I think you and I first met probably 30 years ago when Docklands was just a new concept, and probably neither of us thought it would explode and expand in the way it has. I think in Canary Wharf alone there's something like 20,000 odd apartments coming on stream in the next couple of years. What do you think that's going to do to prices down there?
Well, we monitor very closely, actually, the supply in areas like Canary Wharf and indeed across London. You're slightly exaggerating the figure, but it is significant. I can tell you it exactly, actually. It's about 6,800, according to our research guys, coming up in the...
I'm using the Tower Hamlets planning,
planning right.
briefs.
Well, yes, in fairness, my number is more focused around...
what's being built.
Well, that's more likely to be built, and we look at that. And in fact, my figure of 6,800 is more around the Canary Wharf and its sort of halo. I take absolutely the point that in Tower Hamlets there are other schemes. Fact is, there's a lot, and it doesn't matter if you're talking that more prime bit around Canary Wharf or more broadly. There's a lot coming through. And it's going to be very interesting to see who the winners and losers are over the next few years and who gets it right.
Okay, and again, just looking at that particular market, because East London is stretching from Stratford to Canary Wharf to the Isle of Dogs, that area has been an area where perhaps young aspirational people have been buying, but the market has certainly slowed and has definitely slowed with properties over £1 million. Why do you think that is?
Well, I think affordability is a very fundamental one. And when people talk about the woes in the market, they quite often cite things and fail to just recognise that extraordinary disparity between average wages and average property prices. Now, that's a very blunt measurement, and particularly when it comes to, as I was mentioning earlier, the sort of very much more granular nature of the market. But the fact is, there's no getting away from the fact that in London, with an average wage of £35,000 per annum, and property prices and all the issues around mortgage regulation, etc. now, to get on that property market is just so difficult and more difficult than it's ever been in our lifetime.
So what is the scale of the problem? The health of the economy and the status of the housing market are intricately linked. When house prices go up, homeowners become better off. They feel more confident and will spend more. When house prices go down, homeowners' confidence decreases and they are likely to reduce their spending. Mortgages are the greatest source of debt for households in the UK. If many people take out large loans in comparison to their income, this can put the banking system at risk in an economic downturn. House prices also tend to rise more if people are able to borrow more money to buy them. The more lending the banks and building societies are willing to provide, the more people can buy, and house prices will rise. The Bank of England also affects house prices through setting the key interest rate in the economy. The lower the interest rates are, the lower the cost of borrowing to pay for homes, and more people are able to afford to borrow to buy a house. The problem for the housing market is that the Bank of England has increased the base rate from 0.5% to 0.75%. This is only the second rise in over a decade, and limitations are being placed on building societies and banks for mortgage lending. We spoke to Stephen Jennings to find out more.
Now, again, we've had a switch over the last decade or so from building societies being the bulk lenders to the market to the high street banks doing mortgage lending. Do you think that has been curtailed somewhat by the Bank of England trying to make their balance sheets stronger and insist on high deposits? And
Yes, it has. I think the Bank of England have almost said that we need to go back to the old days of mortgages for 25 years, and you keep the mortgage for 25 years and the bank keeps it for 25 years. It's the responsible lending which to some extent controls the price and the market for the housing stock.
Unfortunately, the problems for those looking to purchase a house don't stop here. In England and Northern Ireland, you're liable to pay stamp duty when you buy a residential property or land, adding extra pressure to buyers. But could one simple idea become a potential solution?
somebody buying a property today is faced with quite extensive stamp duty costs. Those costs are not fundable. They've got to be cash. Now, I appreciate the higher up the scale you go, the more it is, and some people might well say, well, it's affordable. If you can afford £2, £3, £4 million for a house, you can afford the stamp duty. But not always. Sometimes it's people growing with their families. Prices in London are extremely high. But I do think that the days perhaps of us just being able to sell our homes tax-free are over. We've got social responsibilities now. We've got an ageing population. We have national health bills which are uncontrollable. So if there was a small percentage of your profit put towards stamp duty, i.e. as the seller rather than the buyer, I don't think that would hurt. I think it would increase government intake on stamp duty, and I think it would help tremendously young people if they were negated from having to find this. What do you think?
Well, I think from your aspiration's good. I don't think it's so much about young people, because actually with the changes that came in with stamp duty back in 2014, I think from memory that the figure was something like £930,000. If the property you were buying was less than that, you were actually better off with those new stamp duty rates that George Osborne introduced. The real killer, I think, actually is not so much with first-time buyers, it's around second or third-time buyers, who of course have got no help at all with Help to Buy. Right. And really the big sort of, let's call it sort of constipation, if I can use that word, in the market is the inability or the strive that people have to move from, let's say, typically a 3-bedroom terraced house, and perhaps they've had a child, I'm assuming, let's say they're a couple and they've had a child, and they want to trade up, perhaps another child's on its way, they're running out of space. That leap that they have to make between that 3-bedroom and the 4/5-bedroom is not helped at all by the stamp duty penalty. No. And I think that's where the main issue lies.
But of course we are seeing, again in East London, in some of the more densely developed areas, we're seeing 1-bedroom apartments now starting at £850,000. This is a phenomenal amount of money for young people. The deposits they need to find at that sort of level are very high. And the stamp duty to me just seems to aggravate it beyond belief.
It doesn't help. It is a penalty because everything's got so expensive. So everything that you put on top is ever more painful. But your principle of perhaps looking at the vendor bearing the cost of some stroke all of the existing stamp duty, I think is a very interesting idea.
I mean,
I
can see an owner saying, well, wait a minute, I paid stamp duty going in, I don't want to be paying it going out. But of course that initial stamp duty they paid could always be credited against any liability on the sale, so the net difference would be paid, nothing more. I think it could be handled, but I really would like to see a movement away from unfundable sections of the property purchase lying there, like stamp duty. It's got to be cash, it can't be borrowed, it can't be funded, it must therefore be restrictive. I'm hearing that the government is actually considering either a moratorium on stamp duty or perhaps a reversal, as I've suggested in our programme today. What are you hearing?
Well, there's obviously quite a bit of noise around it. I think Boris Johnson quite recently has looked to perhaps distract from other things going on in his life. Look, it's a very welcome debate. And it's been extraordinary, actually, how stamp duty revenues have kept coming in, given that we've had some quite draconian new stamp duty in place now for almost 4 years, actually. But it's apparent now that the market has slowed down enough to mean that the income is off. And it certainly is, and there's a lot of speculation about this, that by some relaxation, it will help sort of oil the wheels of a machine that has started to run quite slow.
After the break, we continue looking at the topic of stamp duty and other sales tax charges and get the views of MP John Stevenson. Before the break, we spoke to Dominic Grace and Stephen Jennings about the current state of the UK property market and the effect that the Bank of England and stamp duty are having on this. We're now continuing with the subject of stamp duty. We asked Stephen for his views about a potential switch of the payment of stamp duty from the buyer to the seller.
Now, again, one of the things we've previously discussed is the switch of payment of stamp duty from the buyer to the seller. What would you think about that?
I think that's a very good idea. Ultimately, it's the seller that has the money from selling the house. They have benefited from the rise in house prices over many, many years. It's generally accepted that it's the seller that pays the tax whenever they sell a house. You know, if it's a second home, you pay the capital gains tax. So it makes much more sense for the seller to pay for the stamp duty.
Okay. Now, would you? We've had various changes in stamp duty thresholds over the last 4 years to try and, I think the government said to restrictor bubble happening, particularly in the southeast, but it's actually killed the market across the board, hasn't it? Because if you kill the top end, I'm afraid it does spread all the way down and radiate out too across the country. But would you prefer either a switch of emphasis of payment to the seller, an abolition of stamp duty, and perhaps the introduction of a sales transaction tax?
Yeah, I mean, a sales transaction tax is very similar to stamp duty. It would be paid for by the seller of the house. It's important that we get movement in the housing market. We want people who were first-time buyers to move up the chain. We want people at the top of the chain to downsize. They're not able to at the moment because there's no one to buy their homes because of the stamp duty is so much. You know, people are thinking, well, I'll stay where I am, I'll spend that money on my house. It's not freeing up the stock at the lower end for the first-time buyers to get on the property ladder.
Sure. Of course, there will be screams of, well, we pay enough tax anyway. But do you think perhaps the days of us selling our homes, making quite substantial profits and paying no tax on that sale, do you think they're over?
I think they could be. I think that's something that could come eventually. And I think maybe the sales transaction tax is something towards that.
Probably the simplest way.
It's probably the simplest way. I mean, you know, house prices have gone up substantially. There is a general policy to tax housing, to tax property. It's easy to tax because it's fixed. You can't move it. So when you look at all the tax changes over the last few years, property has been central to that.
Yes, I'm just thinking in terms of perhaps inheritance tax, capital gains tax. I presume that any sales transaction tax would be capable of being offset against any liability on those two taxes.
Yes, I mean, currently for capital gains tax, if you are selling a second home, for example, then you're allowed to offset any costs associated with selling that property. This would be one of those costs. Similarly, for inheritance tax, I would see that you would offset this sales transaction tax against the estate value. Otherwise, obviously, you'd be paying tax on a tax, which wouldn't be right.
To get another perspective on this, Stephen visited John Stevenson MP in Westminster.
When a young person has got to find, perhaps a 25 or 30% deposit, when they've on top of that got to fund the stamp duty, it all becomes a pretty unachievable ambition. So I do think we've got to look at that. And one of the suggestions that has come up recently is to move the stamp duty liability from the buyer to the seller. What's your view on that?
This is a policy initiative that I've supported for a very long time. Indeed, I've even had a debate in Parliament about this very subject. At the end of the day, I recognise government doesn't want to lose its revenue. And I think that's very important in the present situation where government needs as much as it can get. So therefore, shifting the liability from the buyer to the seller would not change the revenue. Indeed, it might actually increase the amount of revenue that central government would get. But I think there are three key issues that would benefit the housing market. First of all, any first-time buyer would be exempt from stamp duty, so they would pay no tax whatsoever when they purchase a property. Somebody moving up the ladder, they bought their one-bedroom or their two-bedroom property, they've now got a family, they want to move up, bigger property, they would pay tax at the lower price, which would undoubtedly benefit them, make it more affordable, easier for them to move up the housing ladder. And then third issues, and you could argue that many people who own their own home now, who are older, have benefited from inflation in the past, from the vast increases that we have seen in house prices, while the next generation are struggling to get on the housing ladder. And I think from my party's political perspective, and I think generally across society, people like to see people buying their own property, moving up the housing ladder. And anything we can do to improve that, I think, is a good thing. And I think we also have to recognise that those who have had their property for many, many years are in a better position to actually pay for the tax. And therefore, I actually think it will improve the housing market itself. It'll give those who are starting out in their housing career, if you want to call it that, will benefit enormously. And it also helps the person moving up the housing ladder with the sort of young family. It makes it slightly easier for them as well.
Yes, I think
from the government's perspective, they're not going to lose any revenue.
No.
And indeed, I think there's a strong argument. I think you could see an improvement in the housing market full stop.
Well, I think you're right on that. Now, I think I'm aware that you saw a paper that was produced probably 12 months ago that was actually suggesting the abolition of stamp duty, but introduce a sales transaction tax as a replacement. How's that been received politically?
Well, interestingly enough, the Chancellor did go some way at the last budget to improve things for first-time buyers.
Yes.
You saw the increase in the threshold for stamp duty. So the government is not insensitive to this, far from it actually. They are doing things. I think they just got to go that one step further and actually change who actually is responsible for the tax, not the buyer but come the seller. What you call it, I think, is immaterial, because at the end of the day it is a tax about the sale of a property, and that is what matters. But there have been other incentives from government. I think government recognises that the housing market, the housing issues are extremely important, and there's, as I've said already, a generational issue. It's about bringing on youngsters and allowing them to be able to afford their new home. So it is about supply. It's about how the banks and building societies can ensure that money is lent. And I think it is also about the taxation of property.
Okay, and your preference out of those two solutions? Would it be a sales transaction tax, or would it be just a simple shifting of the burden of stamp duty?
I think they're one and the same thing, to be perfectly honest.
To some extent, yes.
And therefore I just think shifting the burden is the key to this.
Yeah.
And I think in the long run I think it's the right thing to do. I actually think it'd be welcome. I know, for example, the Yorkshire Building Society is very supportive. I think other professionals in the housing market are also very supportive of this. And to some extent, government's already gone a long way in this with regards to stamp duty for first-time buyers.
Yes.
I think it's just another step forward to go the whole hog.
Now, my final question to you is one of sort of ethos, I suppose, really. I've often seen where government has tried to spike bubbles and control the market. In reality, if it works, if the market slows down, if it reduces inflation, actually the government are reasonably content with that. It makes the inflation figures look fairly good, albeit that it's at the cost, especially now, of our young people. Do you think there is an appetite within government to really make some significant changes over the next few years?
Yes, very much so. I think the government has put housing as one of its central policies because it wants to improve the ability for the next generation to acquire their own home. And therefore they are intent in changing policies in terms of planning, in terms of housing supply, as best they can to see that change. And I think what you want to see is an active housing market. I think we've got into this mentality that housing is an investment. What we want to see is increase in price rapidly and we make a massive gain in it. Actually, what housing is about is somewhere to live. It's a home. It's somewhere you bring up your family. It's somewhere you live and you have friends in that community, etc. And that's what we need to get back to, recognising that housing is about where you live. It is not about an investment. And therefore what you want to see is an active housing market with good supply, taxed in the correct way.
Okay. John Stevenson, thank you very much indeed. I'm encouraged.
So, although it's clear that the matter of providing enough homes and making them affordable is complex, perhaps the movement of stamp duty into a sales tax paid by the seller could well be one simple step to help.